Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look on the gold market. So as you can see on Friday, gold market has shown a bit curious price action, at least on the first glance, because as you know, this was widely announced reaching of the agreement on the first stage, at least the first stage between the United States and China, and theoretically, as we suggested it, theoretically, common sense suggests that market should drop because it is relief in tensions, in trading tensions between the two major countries, and that should decrease the demand for the safe haven asset. At the same time, you can see that the price action on the gold market stands a bit different, and that gives the clear hint on the longer term situation that we have on the markets. So in today's analysis that we put on the forum, we see that investors are keeping long-term bullish positions on the gold market. They are not hurried to sell them out, and the overall net position stands near the previous tops. That lets us to suggest that all action that we have since September to the downside is just a retracement with the longer term bullish trend. And the technical picture that we have on the weekly chart, on the monthly chart, mostly suggests this theory. Why we still think that gold stands bullish? Because, guys, nobody should deceive yourself on the things that really has happened. What is the agreement mean? It means that China is near to capitulation. We should understand that the United States has significant negative trading balance. It has significant budget deficit and the national debt. And Donald Trump will make all efforts to contract, if not improve this, and if not correct this totally, but to contract these negative statistics. He will do anything that he could, if it will be necessary, it will twist its arms to its opponents, as we see an example of the China. China stands on the halfway to capitulation. This is the first stage. The next stage will also come, and so on. So Donald Trump, by this recent achievement, significantly improved the trade balance. So the China will have to buy 3 times more American goods in total, not just agriculture, but in general. Instead of the 50 billions, it will start to buy the 160 billions. So better protection of the patents and licenses on the inventions, and especially in the electronic sphere, which is also should provide some cash flows, I suppose, to the United States. So that's only the first part, and this will continue. Also, don't forget about what Trump said about the car producers in Europe. What he said about the luxury goods from the France. So recently, new tariffs were imposed on the Brazil and Argentina on the basic metals. So Donald Trump makes the same relationship with all countries when they have more or less good trading volumes, and where he could improve the trading balance. So that's the trend that he follows. And from that standpoint, the reaching of this agreement, well, yes, maybe it's really some achievement, but it will not reduce the tensions and really tough situation that stands on the market in general. And that makes investors keep long-term bullish positions on the markets. The second factor that gradually becomes stronger, this is the impeachment procedure in relation to Donald Trump. Yes, maybe currently it looks like just Congress battle, and it's not clear yet what result it will be. But the battle in the Congress this year significantly stronger compares what we saw in last year. Last year it was mostly looked like some kind of the joke, I don't know. But this year this is more serious problem. And potentially, investors now are shifting its view from the China gradually to this process because it's coming closer to the Christmas holidays. And it just will become stronger as closer we will come to the holidays. And it's really could be important in the nearest time. All this stuff makes us think that gold is bullish in the longer term view, but in the shorter term, by driving this bit better statistics in the United States, relief in the United States, China negotiations, dovish Fed policy, that could trigger a bit deeper downward retracement in the gold market. So we do not cancel our view that here market really could move slightly lower. Now we're coming to the short-term analysis of the gold market. So on the daily chart, unfortunately, we can't make some clear judgment on the situation because take a look, market stands in clinch. Right below the market, we have strong confidence support. Right above the market, we have daily confidence resistance. So market stands tight between the two levels, challenging this upper border, but every time it was not very successful. The one thing that I could say here is that this type of action here starts to get some signs of the bearish dynamic pressure because market turns trend bullish, but price action mostly flat. This is the first moment. And second moment, guys, take a look at this type of price action that we see here compares to this one that we see here. It's almost the same. Drop, drop, pull back here, pull back. Here is some rounding bottom, spike, retracement, upward action, and then collapse has followed. So very similar shape of the price action here and here. That's, of course, not sufficient to make the trades, but at least this is some observation that could become the one detail in the whole puzzle. That we'll keep an eye on. So meantime, I think that while we do not have yet the clear setups on the daily, we will continue with the same tactic as we followed on this week. What this tactic is? It's the tactic of the following the short-term patterns. Last week we've got three patterns, and all of them has worked nice. So we'll take a look at the hourly chart. We call our guideless steeple to buy here. So previously it was again this upper action, the selling guideless steeple to sell pattern here. Here as well, it was retracement after this butterfly. So I think that we could start next week with the setup that we have finished this week. Recall what we said on Friday. That is a reversal hand and shoulders pattern. And we said you could try to sell at the targets. So at OP, but mostly on the XOP. At OP, take a look. This is A, B, C, bottom, and hand and shoulders. OP has been hit. 30% retracement or even better, more, as you can see, has been done. So this drop has reached at least the 30% level, but even deeper. So that entry with these guideless steeple to sell has worked nice. Now, as market is coming close to the XOP, we will watch for this target because it creates the agreement. It's in 1477, 1479, XOP near the fib level, and that will be ultimate target of the hand and shoulders. That will be next opportunity to sell, which we will take a look at on Monday. Also, guys, here with this OP reaction, we have greater AB equals CD pattern, which has the same target as the XOP. That in turn gives us larger guideless steeple to sell pattern. So that's the first setup that we intend to follow. So taking the position here, based on this setup, with the minimal target, at least 30% pullback. I suppose this will be about 7-8 bucks per contract. Here should be the pullback. The common approach for trading is as follows. Take position at the pattern, whatever you would like to do. Wait when the market will move to the minimum target. Close the whole position or at least the 50% of the trade and move, stop to the break-even on the rest of your position. That's the classical approach when you trade in such environment as we stand right now. So that's our view on the gold market. Those of you who would like to know more details about longer term situation, you could read our report as usual. And we will start this week with this setup that we have on our chart.